2025 marked the return of full-scale economic confrontation. Hours after taking office, US President Donald Trump reignited a global trade war, rolling out sweeping reciprocal tariffs starting at 10% and quickly escalating for key partners. Tariffs soon hit historic highs, up to 145% on Chinese goods and 50% on Indian exports, sending shockwaves through global markets. Supply chains were disrupted, costs spiked, and retaliation followed as China's exports to the US fell for 8 straight months while Indian industries scrambled for alternatives. Framed as leverage for new trade deals, the tariff blitz would test how much strain the global economy could handle.
My fellow Americans, this is Liberation Day, waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again.
The US-China trade war swung between escalation, negotiation, and uneasy truces. New US tariffs in February were followed by levies tied to fentanyl precursor exports, prompting Beijing to retaliate against American agriculture, energy, and autos. By April, tariffs on both sides had passed 100%, export controls tightened on sensitive technologies, and sanctions deepened the standoff. Behind the headlines, back-channel talks continued, with fentanyl emerging as a key pressure point. Temporary truces through May and summer repeatedly broke down over whether either side would make real concessions to unlock relief.
I think that is one of the most important bottom line issues that the US urgently wants to resolve. And it really won't take much from the Chinese side to help to honor their end of the bargain. And for the American side, it's easily, making sure they just remove the 20% tariff that was added because of its frustration toward China's inability to control the export of those chemicals.
Beyond fentanyl, the fallout was swift and global. Trading partners struck back, from China's levies on US farm goods to Canada's electricity surcharges and Europe's countermeasures. Rare earths became a critical pressure point, disrupting supply chains for EVs, electronics, and defense systems. Companies passed on higher costs, automakers faced overlapping steel and aluminium duties, and even toy makers warned of price hikes. Courts intervened with lawsuits and rulings that repeatedly paused and reinstated tariffs. By May, consumers faced an average effective tariff rate of 28%, the highest in over a century, embedding volatility across manufacturing, agriculture, energy, technology, and global markets.
The 2025 trade war was more than just about tariffs. It was about leverage, supply chains, and who sets the rules of global commerce. What began with sweeping duties became a year of retaliation, uncertainty, and rising costs, exposing vulnerabilities from store shelves to rare earths. As temporary truces replace lasting solutions, the world enters 2026 with a more fragmented trading system where the economic power is increasingly weaponized and the global stability remains fragile. In New Delhi with camera person Monty Singh, this is Diptanshu Kashyap for the Economic Brief, DD India.
Well, we have Mr. Basu with us still. So, Mr. Basu, are tariffs yesterday's war? Because, the countries have factored it in, that the tactics have been understood. What do you think? And maybe to the detriment of the United States also?
Yes, to some degree, to the detriment of the United States. But I think there's some evidence that the US industrial sector is, in fact, responding positively. Inflation has not risen as much as many economists were predicting. The key reason for that is oil prices have stayed low. And in fact, they're currently around $60 a barrel for Brent crude. So they haven't really risen much over the past 12 months. And they initially fell from about $80 a barrel on the day of the election in November 2024. Between that day and now, they've come down quite a bit, from 80 to around 60. And that has helped keep US inflation relatively low. Right. Not too low. It's around 3%, which is not really low relative to what the Fed wants. It wants it to be at 2%. But it's not high relative to what existed during the Biden years. In fact, it's lower than the average inflation of the Biden years, which basically means that inflation hasn't really taken off. But with regard to tariffs, we haven't had a repeat of the 1930s. The fear was that the US would impose very high tariffs, the rest of the world would retaliate, and we would have a beggar thy neighbor kind of situation similar to the 1930s. Nothing of the sort has happened. In fact, the US has retreated relative to China. It has come to compromises with most other countries. Unfortunately, India is not among them yet.
Not yet.
Partly because India is playing hardball. India is not giving way on agriculture and dairy. And so the negotiations continue.
Indeed.
But most other countries have given in. The UK has a bilateral trade deficit with the US, but it is still facing a 10% tariff. Same with Singapore. They haven't done anything to retaliate because they know that access to the US market is very important, and they are taking it on the chin. 10% tariff, okay, we'll still go and trade with the US. So there's been no retaliation. Supply chains have been disrupted, but not excessively.
But what do you make of India's trade diversification? 4 FTAs signed this year in 2025. What do you make of it? Yeah,
that's very good. I mean, FTAs with the UK, a significant trading partner, the European Free Trade Area, which is for small countries. Switzerland is an important source of capital flows. Liechtenstein, another one, even smaller, but similar. Norway, an important oil supplier. So that's the EFTA countries. Oman is a very interesting one because Oman and India have historic ties that go back 300 or 400 years. Oman has Hindu temples from 200, 300 years ago. And it welcomes Indians and does not welcome Pakistanis. It's a very interesting country. Now, the previous Sultan of Oman went to Mayo College, Ajmer, and he had a soft spot for India as a result. The current guy does not have that link, but he is continuing his uncle's relationship with India and has just deepened it with the Oman FTA. Now, the FTAs provide preferential access to Indian professionals into places like the UK. Now, this is very interesting because when the British were ruling us, they didn't recognize most of our degrees. They didn't recognize our professional qualifications. But now they are going to move towards recognizing a lot of Indian qualifications. And that will enable freer flow of professionals. That will effectively deepen the relationship, the commercial relationship between the UK and India. And of course, India, the likes of Tata, Lakshmi Mittal, the Mittal, ArcelorMittal Group, are major investors in the UK economy. So is, the IndusInd Group. So you have a lot of Indian entrepreneurs that have a significant presence. In fact, the Tatas are said to be the largest employers in the UK. And so that means that the relationship between India and the UK is changing towards one in which India is playing on the front foot, and Britain is going along.
And similar also perhaps with New Zealand.
New Zealand too, Now, interestingly, the New Zealand one is just being negotiated, been negotiated now, and it seems to exclude dairy.
That's right.
Now, if you look at New Zealand, its primary exports are dairy products. But New Zealand has made the pragmatic decision that it would prefer to have access to the rest of the Indian market, even if dairy doesn't open up to it, because quite frankly, I'd say that Frontiera is not that competitive against Amul and Mother Dairy. But that is to be tested. India has kept it aside. So, and New Zealand has agreed. So now the interesting aspect of that is that RCEP, all the members of RCEP except China, now have FTAs with India. So India is effectively a member of RCEP without some of the disadvantages of the non-tariff barriers that China has.
So it looks like India is on a strong wicket